Welcome back. Today, we are analyzing a company that is quietly building the Internet of Things one tiny chip at a time. We are talking about Impinj, ticker symbol PI. You might not see their logo on your clothes or your packages, but their technology is likely tracking the items you buy every day. We have conducted a deep dive into their financial filings from the pandemic year of 2020 all the way through the third quarter of 2025. This is a story of a company that survived a brutal supply chain crisis and years of expensive lawsuits to emerge as the dominant player in the reign RFID revolution. Let's start by setting the stage in 2020 and 2021. The world shut down. Retail stores closed. But for Impinj, the pandemic was a paradoxical event. While physical stores suffered, the need for accurate inventory data skyrocketed. Retailers realized that if they didn't know exactly what was on their shelves, they couldn't fulfill online orders. In the 2021 OK, Impinj reported revenue of about $139 million. It was a tough year, marked by uncertainty. But the seeds were planted. The omni-channel boom forced companies to adopt RFID tracking to survive. Moving into 2022 and 2023, the narrative shifted to supply chain hell and litigation. Demand for Impinj's endpoint ICs, the tiny chips that go into tags, was off the charts, but they couldn't make enough of them. The global wafer shortage hit them hard. Their filings from this period are filled with warnings about wafer supply constraints. Simultaneously, they were fighting a massive legal battle with their biggest competitor, NXP Semiconductors. The 2022 and 2023 1.0 case show millions of dollars burned in legal fees. This depressed their profitability and scared off many investors. However, revenue continued to climb. By the end of 2023, revenue had crossed the $300 million mark. Why? Because despite the shortages, the adoption of RAIN RFID was accelerating. Major logistics players like UPS and FedEx began piloting the technology to automate package tracking. Now, let's look at 2024. This was the turning point. The supply constraints finally eased. The company settled its litigation with NXP, removing a huge cloud of uncertainty and expense. In the 2024 1.0 K, we see the impact of a major industry shift. The Walmart mandate. The world's largest retailer expanded its requirement for suppliers to tag products with RFID. This drove massive volume growth for Impinj's chips. But it wasn't just about selling more chips. It was about profitability. Management focused on improving gross margins. They transitioned to newer, smaller, and more cost-effective chips like the M700 and M800 series. These chips use less silicon, which means they are cheaper to make and higher margin for Impinj. This brings us to the present. Fiscal year 2025. We have analyzed the 1Q reports for the first 3 quarters of 2025. The story has evolved again. The keyword now is systems and recurring revenue. In the third quarter of 2025, revenue was approximately $96 million, stable compared to the previous year. But don't let the flat revenue fool you. The quality of earnings is improving. Gross margins hit 50.3%, a sign that their new products are commanding pricing power. The systems business, which sells the readers and gateways that scan the tags, is becoming a critical part of the ecosystem. It's not just about selling a 5-cent chip anymore. It's about selling the infrastructure that reads billions of those chips. However, we must address the risks found in the recent filings. First, macroeconomic sensitivity. The 2025 reports highlight that retail demand is softening. If consumers stop buying clothes and shoes, retailers buy fewer tags, and Impinj sells fewer chips. Second, customer concentration. Impinj relies on a few key inlay partners to buy their chips. If one of these partners loses share or switches suppliers, it impacts Impinj directly. Third, geopolitics. A significant portion of their assembly and testing happens in Asia. Any disruption in Taiwan or Thailand could choke off their supply again. So, what is the verdict for late 2025? Impinj has successfully navigated the startup phase and the crisis phase. It is now entering the scale phase. The litigation is behind them. The technology is proven. The world's biggest companies are mandating their product. The financial data shows a company that is balancing growth with discipline. They are profitable on a non-GAAP basis and generating free cash flow. If you believe in a future where every item in a store, every package on a truck, and every part in a factory is connected to the internet, then Impinj is the foundational layer of that future.